just wanted to share my story, my journey with you guys, and hopefully inspire you guys to chase after bigger goals, especially in the real estate space. So I really appreciate you taking the time out and joining me. So a little bit about what we're going to cover today. Today's agenda, talk a little bit about myself, my background, timeline, balancing W-2 with real estate investing, strategic planning, how I scaled to 193 units in 3 years, financial fitness, which is very important in the real estate space, and navigating challenges, and then we'll go over some Q&A. So really what I want to share with you today is my experience in having a W-2 and being able to scale to 193 units. And though these are concepts, these are actually my real life stories that I'll be sharing. And I hope you guys get a lot out of it. I'll be sharing a lot over this next hour, so might feel like a lot of information, maybe not, but hopefully that you guys take something away from it. And if you need any questions or support when we wrap it up, I'll make sure to provide that for you. All righty, so a little bit about me. I'm from Visitation Valley, San Francisco, California. Immigrant parents. I'm Filipino, public school kid, survival mode mentality most of my life, childhood, even up into my adulthood, to be honest. Eventually joined the military. So I'm a Navy veteran, father, husband, real estate investor, coach, and mentor. This is just kind of a snapshot of where I was, my mentality to military, to getting married, closing some deals, and traveling. That's ultimately what I want to do, is just spend time with my family, raise my kids the best way I know how. And things had to happen in order for me to switch my mind. And some of the turning points that happened in my life was my mother passing. There was a shooting in front of my house, and I started to think about my children's safety. That became my priority, and that was just like the start of changing my mindset on things. And I wasn't, at this point, I thought, like, I never even thought I'd own one house. I never thought I'd be able to buy real estate. I never thought I'd get out of my neighborhood, but I know I needed to. And full transparency, this is 2018. I was only making like 50K a year, so I wasn't making much in the Bay Area. I was really struggling. And I had people around me telling me I would never be able to afford, I would never be able to buy a house. This is my own family telling me this. So not all my family, but some of them. So and that's kind of where I needed to change my mindset and my goals. So a little bit about me. We're going to go into my timeline, and I have the years that are in bold. These are the years that I really started focusing on real estate. So 2015 to 2019, I really didn't know what I was doing. I just was doing what I thought I needed to do. Like, I got a house in 2015. It needed a lot of work. I just started doing rehab. And then rates were coming down, property values were going up. So I did a cash out refi. This is when I started to learn about equity. This is my first cash out refi. 2019, I did another cash out refi. I added 2 units to a single family home, so I turned that into 3. And then that's when, things started to settle in, like, okay, wait a minute, there's something here. I was getting tax-free money, and like, this was becoming proof of concept, right? So I turned a 1 unit single family home into 3 units, and I started to house hack. Before I knew it was called house hacking, I just wanted to get rent, provide housing for renters, and then try to offset my biggest expense, which is my mortgage. So 2020 rolls around. This is when I got renters in my property. I started looking for another house. So I bought a property in South San Francisco, and I was house hacking at this time. My other house was 100% occupied, and this is where I started to focus on my education and self-development. And the proof of concept was there, right? There's a way to generate revenue off of real estate. So that's what I learned. And then this is when I got more intentional And I wanted to essentially accelerate my learning curve and achieve my goals a lot faster. So I joined a coaching program, and which is Zen Coast. And then with the support, the community, I was able to buy an out-of-state property in San Antonio, Texas. I used private money. It was a BRRRR, for those that don't know. BRRRR is an acronym for buy, rehab, rent, refinance, pull your cash back out, and then repeat the process. So that was my strategy at the time. And then also got into a 36 unit in Alabama. And this is when I started to feel like I have a new identity as a real estate investor, right? I got some experience through the years. And then 2022 rolled in, got a 2 unit in Oklahoma. I short-term rented one of my other properties and continued on with my education and self-development. This was the year when rates were just increasing, rapidly. And so I was a little conservative and on the defense. 2023 rolls around, had 4 units under contract, but I had to back out. So I lost a little bit of money there because same thing, rates were going up, prices were going up, just wasn't making sense. End of the year, on the co-GP side of 150 units, and growing into a newer version of myself, as time went on. And then for this year, my goal is relationships are very important to me. So continue building good relationships, focus on mental, physical, just all aspects of health. And I believe that if I focus on these things, it'll help me perform better and just be a better version of myself all around. Grow my multifamily portfolio, continue to learn, network, look for deals, be a person of value, and now coach. So that's my timeline right now. Take a quick pause right here. Is there any questions that anybody has before we continue? All right, I'll take that as
some of the identities. So I see that you had identities starting in 2021. What was your identity before then?
ooh, okay. Well, I was really heavy into the music industry, so I was kind of running that circuit, and the transition was very difficult for me because that space is very, very different than the real estate space, meaning the mindset. So in like music, entertainment, and that type of business, it's very, I would say, crabs in a bucket mentality where nobody's sharing information because if um, they want to hold this person down so they can come up, and that's just the mentality. I figured it out on my own. You got to figure it out on your own. No sharing resources. Sometimes you come across people like that, but it's rare, right? Especially in like the Bay Area, it was, you really have to have a deep relationship with somebody. It's just very difficult. Yeah, so that's what I was doing.
Hey Jay, I got a question for you.
Sure.
On your single family home that you bought in 2015, the first one, is that the property you built the 2 additional units on in 2019?
Yes.
And was that planned, or did you happen to, fall into the zoning that allowed you to do that just by happenstance? Or
So actually the property already had some stuff built in there. I just kind of reinforced it and made it nice. So yeah, that's the way I did it, right? You can go one way or you can go the other. I felt okay with the neighborhood, with the neighbors, doing it the way I did. So yeah, I don't know if that answered your question.
nope, it's perfect. Thanks.
Sure, no problem. All right, if there aren't any other questions, I'm gonna go ahead and move on. So balancing act. So managing a W-2 and real estate investments. And this is one of my favorite quotes of all time. And this is from one of my coaches, Calvin, who's on the call. He told me this quote, and this stuck with me ever since. The man who says he can and the man who says he cannot are both correct. Meaning, if you tell yourself you can do something, you're going to figure it out. If you tell yourself you can't do something, you're not even going to try. So I had to change my mindset, and that's how this all happened, right? So how do I start investing, manage W-2 and a family? For me, it was mindset, right? You know, you have to figure out like what's really important to you, right? if you don't have time, you have to think like, how can I have time? How can I carve out time? And you have to focus on what's important. And that's where everything starts to click, right? As I mentioned before, scarcity mindset, that's where I was at, where, the belief that resources and is just limited, opportunities are limited. And, we tend to focus on what we don't have instead of what we do have. We compete, we compare, we're fearful, we're reluctant, we don't want to take risks. That's just that mindset. So I knew I had to change that in order for me to progress. And that's the abundant mindset, right? Belief that there's plenty of opportunities, right? There's room for growth. There's ways to be successful. Setbacks are temporary learning experiences, willingness to learn, to be humble, to be a student, look for opportunities, embrace challenges, and look at that as opportunities of growth. So that was like the beginning of my journey, like changing my mindset and changing my habits. And, just furthermore, like these are some of the other takeaways that through my journey I've found is that you're going to be scared. Everything you do that you've never done before is always going to be scary. So you have to be comfortable moving in fear. And like one of my friends, coaches, and mentors, Jenny, always says, the closer you get to something you fear, the less it becomes fearful, right? So chase it, go after it, be okay if you might make mistakes, you might fail, but you have to, that's the only way you learn, that's the way you grow. Another thing is that I felt overwhelmed a lot. And this is when I had to learn how to take breaks, how to create space, how to rest when feeling fatigued, meditate. It's a mental thing, journal, write down my intentions. And this is just some of the things that I started to work on. And then I started to focus on what was the next important goal. Once I started to get everything aligned, okay, what's the next thing I need to focus on? I wrote it down in smaller tasks and just started focusing on that. And then writing down my goals, time blocking, and executing. That was the game plan. And then, so here we go into I'm sharing some of my tips and tricks, right? So changing my habits, I started I guess it's not always changing habits. It can also just be creating good habits. So that's what I started to do is I created a morning routine for myself so I could set my tone for the day, get my intentions going, figure out what goals I need to hit for the day, consume audiobooks and podcasts, and just try to hit every networking event that I could within my schedule, right? So that was just what I wanted to do. And I believe that if I stuck to this game plan, then I would be able to grow at a rapid pace. And this is an example of how I've been doing my time blocking. I'm sure a lot of you have W-2s, so you have to work around your W-2 schedule. For me, when I wanted to create time, I had to figure out where I can spend time working on the things I needed to work on. So I have kids, so the kids wake up early, so I had to wake up before the whole house woke up, and that was 5:30 for me. And I was dealing in markets like San Antonio and Oklahoma, so they're Central Time, so they're ahead. Their day starts earlier, so I was able to get a lot of my communications out before the kids woke up. 8:45 to 9:30 during my commute time to work, podcasts, business calls, investor relations, just things of that nature. Lunch break would be analyzing deals, just business tasks. On my way home from work, same thing, phone calls, audiobooks, and investor relations. 7 to 9:30, family time. After that, I get myself together and then I'm back on. And then the weekends were flexible, so I was doing maybe like 5 to 8 hours on the weekends. It's just nonstop. Like I was so focused on getting to my goals. Like this is how I was able to accomplish it, right? We can say, it's easy to say we don't have time. That's the easiest thing to do. But it's like, how do you carve out time, right? Maybe you can stop watching as much Netflix or whatever it is that you're doing that doesn't really serve you, right? I have my goals and I'm going for it. So that's how I was able to just dedicate time. Otherwise, if I didn't, nothing would change. That's 100%, a fact. Nothing would change. So Oops. Sorry, we good, everybody?
I got a quick question, Jay, if that's okay.
Yeah, sure.
Notice you have a really early wake up time. Any particular tips for how you got it to be so early? Right now I'm around 6:30 a.m. or so, 7 a.m. But trying to get that a bit lower. Any tips for that?
For sure. Check
Mhm,
out the book Miracle Morning by Hal Elrod. That
mhm.
and there's another book, Atomic Habits by James Clear. So essentially what I did was I didn't just start off hitting 5:30. I started off like in increments. I was like, okay, let me try 6:30. And then I got comfortable doing 6:30. And then I was like, okay, let me scale it back to 6. And then what I was doing is I got it from Atomic Habits, the book, is that I would put my phone, my alarm, across the room. So when my alarm went off, I would have to get out of bed to go get it to silence the alarm. And then at that point, I would just start my day. But that was it, right? I had to get out of bed to start these habits. And then I started, I didn't just start off at 5:30, I worked my way up. Yeah, so good question. Hopefully that was helpful. All right, just moving on. So as a result of like those habits, time blocking, I was able to scale to 193 units, and this is my portfolio. 3 units in San Francisco, single family home, South San Francisco, which is an Airbnb, single family home, San Antonio, 36 unit in Decatur, Alabama, 2 units in Oklahoma, and then 150 units this year. 4 units under management, short-term rental that we're also managing in the Bay Area. So that's my portfolio. And yeah, so kind of go over some of the things that I did to get there, right? So the future depends on what you do today, Gandhi, right? Things you do today will dictate who you're going to be in the future, how you're going to be in the future, and what your outcome is going to be. So got to get started. So how do I invest in real estate? Get educated, build relationships. Education is key. So as I mentioned, listen to real estate podcasts religiously, like every day. Audiobooks, signed up for free real estate webinars, join mentorship programs like Zen Coast. There's another group, Infinity, and then the SARE community, Subtle Asian Real Estate. And, just learn from everybody, build my relationships. And I'll share this story with you. When I was going through all of this, right? I had just bought my second house. It was the first big property that I bought at the time, right? $1 million property. Mortgage was $5,700. 2 kids. Rehab started. Didn't even have the funds for the rehab. After close, a week later, our car got stolen. So I was really tight. And then our kids' tuition was expensive. I just didn't know how things were going to work out. And then Jenny calls me. Jenny from Zen Coast calls me and says, "Hey, we're starting this program and we want you to be a part of it." And, and I was like, you know what? I'm just not in the position to do this. Rehab started, don't have the funds for it. We're trying to figure out our whole living situation. I don't even have a car now. Our car got stolen, and it was just a lot of pressure going on, right? And every move that I made would impact my livelihood, my kids. So I said, give me a second to think about it. Took me a week, came to my conclusion, ultimately ended up joining the Zen Coast. And, sometimes you just have to bet on yourself, right? That's the best investment you can make is on yourself. So I was like, I'm going to give it everything I have. And I did. And if I didn't, probably wouldn't be where I'm at right now, to be honest. So that's 1, education. 2, network, build relationships, attend as many networking events, meetups, conferences, get around other real estate investors that are doing, things that you want to do, and then set yourself some goals, learn how to underwrite deals, learn what makes it a deal, right? That's one question that I had. Like, I don't even know if it's a deal. Build your teams, like a core 4, when you're looking for a real estate property, right? That core 4 is your deal finder, your agent, a wholesaler, your lender, property manager, and contractors. So as long as you got those in line, you'll be, and you trust them and you vetted them out, you'll be in good shape. and then put in offers. It's simple steps, and you just gotta, go through the reps and get the reps in, and you'll eventually get some properties. That was my approach on that. And then results. So this was my first out-of-state property, and I ended up just kind of going through that step, right? Education, network, and setting my goals. I ended up buying a 3-bedroom, 1-bathroom San Antonio property, which was a burr. I ended up using private money through a network for the down payment and the rehab costs. I cashed out, turned it into a 4.2 at a higher price, pulled the money back out, paid back my lender, and now I have a long-term tenant in that property. And I think one thing that I want to mention about this deal, why it was pretty stressful, but it was all worth it. So I went to this retreat and I met this girl. Her name was Soka. I met her at the retreat. Didn't meet her prior to this moment. And so we built a relationship, got to know each other pretty quickly. And then fast forward, I leave the retreat, I come home, I'm going to the bank. The lender calls me and says, "Hey, we can't finance your property, sorry." And I was like, "What? What does that mean?" And they were like, "Well, we're not going to lend. We're not going to lend on your property. It's inhabitable. We had an appraiser come out there. They didn't want to give it an appraisal, so we can't lend you money." And I was like, "Oh man, I'm closing on Friday." So I had a couple of days. So I ended up going to a networking event, and Calvin was there. And I was like, "Hey man, this is the situation I'm going through." And he was like, "Why don't you put it out to the community?" So I put it out in our like our Facebook group, and I was like, "Hey, I got this property under contract, and I'm looking for private money, 10% return. We could talk over the details." This was like on a Tuesday. On a Wednesday, I got a call back, jumped on a call, agreed on some terms. Thursday, sent out the contracts. Friday morning, she wired me the funds. Friday afternoon, I wired the funds to escrow and I closed. And this is some pictures of like before and afters. And that was, the power of network, right? I didn't know that this person I was meeting at this retreat was going to be my private money lending partner. I was just there to provide value and connect with people. And that's the importance of going to these events and networking, right? And some takeaways that I have is you can leverage other people's money. The best teacher is your own experience. I learned a lot through this process. And being a part of a real estate community can accelerate your goals. So that was, that was like my entrance into like out-of-state investing. So I know this was a lot of information. Take a quick pause. Is there any questions on this before I move on?
I have a quick question, Jay. Oh, go ahead, Brianna. Go ahead.
Okay, yeah, I had a question. Kind of a two-part question is, how do you find networking events? Like, is there something that you go to specifically to find them in your area? And then the other part was, what podcasts do you recommend?
So, okay, for networking events, I literally, when I changed my identity to real estate investing, I started a whole new Instagram account. I'm not saying that you have to do that, but what I wanted to do is I wanted to change my algorithm to what I was seeing in my feed, right? So I started doing everything searching for real estate. And then I would talk to people about real estate, and then through conversations, they would say, "Oh, there's something going on in San Jose. You should check it out." And then I would follow everybody that is hosting that event and make it a point to go meet them. And then from there, I would meet with other people and they would say, "Oh, have you been to this event?" And then that's how I would do it. And then I would start following Facebook groups and they would post like, "Oh, hosting this event." And it just kind of snowballed from there, right? I just started following a bunch of real estate influencers and then just trying to connect. Bigger Pockets, podcasts. I started listening to that, and there's like a bunch of real estate meetups. Meetup is another app you can look for. Check that out. It's called it's Meetup. It's a mobile app, and you can type in your criteria, locations, what you're interested in, and then events that will pop up on your feed, and then you can like connect with those folks. So for networking, I would say Meetup, and then just start following people that you respect. And a lot of people are doing meetups around your area, right? So, and then for podcasts, I would say for people that are, I would say beginners and advanced, Bigger Pockets was a big one for me. I was listening to that religiously, sometimes like 2 episodes a day, back and forth from work. And you at first you would be confused with the terminology, the strategies, but as you go on and you just keep listening, it's going to start making sense. It just takes a little time. So I would say start off with that. And those would be, plenty of episodes you could listen to that will cover a bunch of different strategies.
Great, thank you.
You're welcome. All right, so moving on.
Jay, real quick.
Sure.
So I guess, is that where your relationship with Zen Coast kind of, I guess, took off? I mean, in regards to your San Antonio property, being the fact that they, raised the capital for that purchase. What was the relationship prior to that with Zen Coast? Was it just like you said, where you were just going to meetings and getting comfortable with the environment, and then this kind of fell in place? You were making the purchase on your own, and then the bank bailed on you, and then your network kind of came through for you, and you were able to make the purchases. Is that safe to say that this is kind of like where you started getting in with Zen Coast?
Ray, my brother he actually grew up like a couple blocks up the street, so he knows where everything before real estate. Thanks for joining, Ray. I knew Jenny, so around that 2019, 2018 timeline, I think 2018, right. I was like, okay, I got to do something here. And I started to reach out to my network, just, is anybody into real estate? And we found a mutual friend, and they connected us with Jenny. They're like, oh, you got to meet with Jenny. So I just had my son, we met with Jenny, and that's where our relationship started. And then, we just kept the conversation going. And 2019-ish is when there was a shooting in front of my house. And, like I'll be transparent. Like I came home, I was like, I want to relax. I opened the door. I lived across the street from a liquor store. The liquor store was getting robbed, or something was happening. The liquor store owner was fighting. And I was like, this is not peaceful for me, and I don't want to raise my kids here. And then soon after that, I'm putting my son to sleep. Gunshots ring off. Shell casings all under my wife's car. Police knocking on my door, and I just was like, I don't want to be here anymore. First opportunity, I'm out. And that's when I called Jenny. I was like, Jenny, I don't know what I got to do, but I got to get out of here. I need to move. So that was like, honestly, like one of the straw that broke the camel's back. So I think that was 2018 when we started having these conversations. I didn't have it all together. I was trying to figure it out. My finances weren't straight. And then 2019 is when I started to get serious. And then 2020, Jenny helped me get my second house. So that's where our relationship stemmed from.
Gotcha. So Jenny was involved when you were doing the rehabs on your original house where you grew up in?
No, I did that on my own.
Okay, so that's where I was so that's what I'm saying. Your transition of doing things on your own. What was the transition point? I guess that's what you said, when you bought your second home, or when you finalized the last rehab on your first home, is when Jenny kind of got involved, and then she kind of catapults you into your second home.
Yep, she got me in my second home, and then Zen Coast started.
Gotcha.
And then that's when she was like, I want you to be involved. And
okay.
And then
I got it. Thank you.
Yeah, for sure. Cool. Great question. So I'll go ahead and move on. And then from there, after I got the second house, I wanted to figure out how to scale, right? So I started to work with my mentors, networks, just people that I met that were willing to help, willing to talk, like some of my neighbors. I didn't even realize my neighbor had 15 houses the whole time I lived there. And, I'd have conversations, look at him as one of my mentors too. And then I started with the end goal in mind, and I worked backwards. I wanted to figure out how to get 100 units. Did I think I could do it? Absolutely not. I was like, I don't know how I'm going to get 100 units, but let me try. Now I started to get around the right people to collapse time, right? Accelerate, and then gain experience with smaller units, just so I could figure out how multifamily works, how to look at the numbers. And then I bought a 2-unit property in Oklahoma, and it's been a solid income generating property. And, you own property in the Bay Area, your debt to income is going to get shot, right? If you're, not like an ultra wealthy, but, if you own a couple $1 million properties, it's going to be difficult. So I started to look at multifamily, and DTI isn't as important as it is for single family homes. So that's why I started thinking multifamily. And then I partnered up on a 36 unit, which you see on the bottom. And this kind of helped me accelerate my learning curve in the medium-sized multifamily space. I learned a lot about deal structures, underwriting deals, and then eventually got into the 150 unit as a part of the syndication as a co-general partner, raised capital, expanded my network, and just more experience. So just continually moving forward, moving the needle. And that's where my focus is just continue like 1% better tomorrow than the day before, and just keep compounding that, just, you know, one step in front of the other. And then, so from this whole process, some takeaways is always be intentional with what you're doing, be clear on your goals, spend time wisely. And, you know, when you say yes to one thing, you're saying no to something else. So just be mindful of that, right? Like, I don't really go out to the clubs like, you know, back in the day. I just don't do it. My focus is my family and real estate. So that's where I'm at. Continue creating great habits around your physical, mental health, spiritual, financial. Build meaningful relationships, show up and give value. Don't just ask, don't just take, but give without expectation. It's going to come back. Focus on the smaller tasks daily that'll help you get to your bigger goals, and stay consistent. That's the secret sauce right here, right? Stay consistent. It's going to get rough, but just keep going. I'm moving on to the next, financials, right? Maximizing returns with a W-2 income. Another quote, the best investment you can make is in yourself, 100%. You can't lose. Yeah, so financial fitness, financial health, really, right? So 2018, 2019, like I said, I didn't really even know how to look at my finances. I was making 50K. So I ended up finding tools like Mint and, you know, and this kind of helped me get a financial picture, right? So once I had like Mint to track my finances, I was able to see how much debt I had, how much income I had coming in, how my spending habits were. And then at the same time, I was like, I need to increase my income so I could buy houses. And I started to apply for higher paying positions, started working on getting promotions, side hustles, which is rental income, just anything to increase revenue. Save as much money as possible, right? Even if I didn't have a deal lined up, I know I was going to get into something in the future, and decrease expenses. When you're thinking about, you know, income, if you decrease your expenses, that's just as good as income, right? Paying off high debt, being more frugal. Tracking finances, like I said, Mint, but it's getting replaced by, I think it's Credit Karma. So I'm using that now. There's other trackers out there, but when you see it, I'm a visual guy. So when you see it, you're like, okay, I can see what needs to be improved. And then you start making those adjustments, right? And yeah, so this is my credit history as of like 30 minutes ago. And I mean, you know, that's where it is. You want to have these good habits, right? Pay close attention to your credit card utilization. Keep your credit card under 10% if possible, right? At least that should be a goal. Pay down balances on high debt, credit card debts, like 25%, 17%. And this is something that I've done that's really helped my payment history, is that I would set up auto payments, and then I would set before the due date and above the minimum. And this has helped keep my credit score and payment history healthy. You can also increase, if you're having problems with credit card utilization, some lenders like banks like Chase, well, if you can call and ask them to increase your credit card limit, I think they did mine without a hard pull, without a hard inquiry, and a hard inquiry is a negative hit on your credit. So you can check with your banks, see if they can increase your credit card limits, so it lowers your credit card utilization, and that will help your credit score go up. Another trick too is that if you have somebody with a credit card, a long history, good history with a high limit, they could add you on as a user, or and you absorb that credit history. So that can make you jump maybe 10, 20 points So if you know somebody that has good credit history, that, I mean, you don't have to use the card. They could just get the card, cut it up. But if you're on there, you get some of those benefits. A little hack there for you guys. Yeah, so moving on. Oh, where are we at? Okay, sorry. And then W-2 income. I know a lot of people are entrepreneurs, and that's great. And I don't really look at W-2 income as a negative. You know, my perspective is it's a way to generate revenue so that you can invest in real estate, right? You can qualify for loans. I know a lot of people that quit their W-2 to go full-time real estate, and they have a hard time qualifying for loans because they don't have 2 years of tax returns or 2 years of history of you know, income. So just be careful when you're thinking about doing that. I was able to grow my network, gain some skills, knowledge, and which I could potentially translate into real estate, and which I have in a lot of cases. Commute time, some people have long commute times. I just use that for self-development and building relationships, as I mentioned, podcasts, business calls, and so on. And as a result, like remember 2018, I was only making 50K. And then just kind of going through this process, I was able to increase my W-2 income, higher income used for higher mortgage loans. And that's when I bought my second property with Jenny. That was in South San Francisco. This was right at the height of COVID, 2.25%, 30-year fixed, and increased my net worth at the height of COVID by 600 grand, but right now it's about 350. Now it's a short term, generating about 90K a year. Last year was 100, but you know, we've seen a little decrease there. And I was able to leverage some tax codes to get a refund, which I ended up using to reinvest into other properties. So that's my outlook. And I mean, people are going to look at W-2 however they look at it. I don't really think it's a bad thing, but I guess it's all perspective. So pause. Any questions around this before I move on?
Good question. Can you speak to what tax code or what tax strategy you used to get that larger refund, if you remember?
Yeah. So first
Mhm.
disclaimer, consult with your CPA,
Yeah.
tax professional. But what I leveraged was, it's called a short-term STR loophole, short-term loophole, to where you can do what's called a cost segregation and a depreciation study, or accelerated depreciation on your property. So they look at the land value, they look at the cost to rebuild, they look at the materials like your roof, your plumbing, electrical, paint, floors, and all that, and they put a value to it as it depreciates over time, right? And what you can do is you can accelerate that 80%, I think it's right now, but it used to be 100%. At this time it was 100%. So you get that value, right? So you pay somebody to do the study, they give you that value, and you can write that off against your active income. So you basically reduce your taxable income by the amount from the study. And in this case, I got a pretty nice size tax refund. And when I was able to use that on the down payment on my Oklahoma property. So being, I would say consult with a CPA, but that was the tax code that I used, right? And I look at, when people ask me different strategies, I look at what their tax liability is, how much they're paying on taxes. Like I spoke to somebody the other day, and they were paying like $120,000 in taxes in a year. And I was like, okay, here's a strategy that I would recommend. And even if that thing is breaking even or not generating enough, you still probably would save a lot more. So yeah, that's it. Short-term rental loophole, STR loophole. Cool.
I was recently reading.
Sorry. Mhm.
But yeah, I was recently reading. I spoke to you about this cost segregation, this loophole. But it's only for short term. The most cost benefit is with short term. Is that true?
That is true. However, if you're a real estate professional, meaning you're working more in the real estate space than you are in your W-2 income, as long as you have it documented, you can qualify for a real estate professional. Again, work with your CPA on that. But I think those are the two main options: is short-term rental loophole, it's easier to achieve, and then real estate professional, which is a lot more difficult, especially when you're working a W-2. So
Thank you.
question.
Hey,
Yeah, let's
Jay,
see.
it's Eric. Question.
Okay.
So who does the cost segregation studies? Is that your CPA or is there another entity that does that service?
I've done both where my CPA's done one, and then I've done one where I had another entity do it, which, yeah. So either or. If you, I mean, I would check with your network. I know there's a lot of other cost seg companies out there that you can utilize. I would say just reach out to a bunch of them.
Awesome. Thank you.
Yep.
Hey Jay, such a
Hi.
cool story. I'm curious, how did you find your first deals? And especially with short-term rentals, there's always like an element of risk. How did you build confidence, or how were you confident in the deal with that risk?
For the short-term rental for the short-term rental, yes, there was risk. Yes, I was scared. Didn't know how it was going to work out. Data, that's how I did it. I used Rabu Data, and it's a website that has data on short-term rentals in the area. And I was looking at comparables, other properties in my neighborhood close by, and I could see what they were generating. So I could get their average daily rate. And then I would just factor that in and do like, okay, let's say if we go 21 days at this price, it's going to generate this amount of money. That's probably below average. So I'm okay with that. And then if it doesn't, am I okay with that? And my answer was yes. As long as I'm, paying majority of my mortgage, I'm okay with that. But the tax benefits are also important. So again, data, it's called Rabu. Just do a search for Rabu Data. I'm putting it in the chat right now. Rabu Data.
Thank you. And then how did you source those first few deals? How did you find them?
So the first one I bought from my family. The second one was my realtor. Actually, my second, third, and fourth were my realtors. So Jenny, you got to be clear about your criteria. Thanks, Amanda. You got to be clear with your criteria. Like, so for me, it was important to find off market, because at the time, Bay Area prices are expensive. So I wanted to find something off market so there's not like back and forth in negotiations with other parties or counter offers, anything like that. So that was important. I wanted something that needed cosmetic work in a good neighborhood and, with some built-in or potential equity. Like, so I got $1 million property. The other comparables in the area were like 1.2, 1.3. So I was like, okay, as long as I fix it up, I'm gonna get, $300K in equity. So data, I would say data and leverage other experts. So in this case, for my short-term rental was my agent, which was Jenny.
Awesome. Thanks, Jay.
You're welcome. All right, I'm going to move on. And so here, navigating challenges, lessons learned. And this is one of my favorite quotes that I got last week from my son. This is a picture of my son, Jack. I was having a really tough day. It was frustrating day. And I came down and I was just telling him about my day. And he's like, Dad, when things get tricky, think back and remember why you're doing this. I don't know where he got that from, but it really helped me. Like, it just brought me back. Like, you're right. And he doesn't know he's my reason, but he is my reason. So but this is one of my favorite quotes, right? You're going to face challenges and it's going to be okay. So here's how I decided to navigate challenges and some of the lessons learned along the way, right? So again, education and research, understand the basics. So real estate concepts, property types, market trends, terminology, local market research, right? So figuring out what market you're interested in, why you're interested in it, the, economic growth factors, property values, things of that nature, laws and regulations, just buying, selling properties, leveraging experts in that area. That's what I do, right? Is I just figure out who's the expert out there, and then I kind of have conversations and gain knowledge. That's my hack. Financial preparedness, right? Budgeting, figuring out how much you can afford, factoring taxes, insurance, maintenance, different types of mortgage options, right? There's interest-only mortgage. You can buy down rates. There's other like VA loans if you're a veteran, right? Figuring out what kind of options you have, having an emergency fund if things go wrong. Can you float for a couple of months, right? Just making sure that you're prepared. Build strong relationships. So connecting with real estate professionals, agents, brokers, property managers, and they'll help you learn the market at a faster pace because they live there, they work there. Again, networking, connecting with real estate investors. Like my example, right? Networking provided an opportunity for me to have a private money lender in a deal that I didn't even know that was going to happen, right? You gain knowledge and potential future partners. Mentorship, right? You kind of accelerate your learning curve because you have people that have been doing it and you can lean on them for advice. Risk management, just recognizing what type of risks you're going to face, like market fluctuations, unexpected expenses, regulation changes, and be prepared for it. Risk mitigation, develop strategies that maybe diversify your investments, have plans, or stay informed about market conditions. That's why it's important to have relationships, right? Like, how's the market? You talking to your agent, you talk to your lender, and that's how you get this information. Adaptability, just understand that the real estate market is dynamic, right? Things change. Be open to adjusting, pivoting. Sometimes you have a plan, you're going one way, one direction, and now that plan no longer works. Now you got to adjust and be flexible and be okay, if things happen. So you just have to adapt to the change. So, this is kind of my mindset through this whole process, right? These were like some of the key things that I felt made me successful in just navigating. And yeah, so, some other factors to keep in mind is that location is crucial, very critical, right? If you get a C-class neighborhood with, difficult tenants, it's not going to be fun, right? So picking a good location, diversification, right? Like, things change, markets change, and, sometimes you got to try different strategies. Due diligence, researching potential investments, reviewing market trends, understanding the risks, and so there's a lot, right? Understanding your financials, right? Going back to making sure your credit is strong, your spending habits are good. Look out for like strategies that appreciate, tax strategies. All those strategies will help keep moving the needle forward. Long-term perspective pays off, right? Real estate is a long-term play. In general, right? You can make some quick money on flips, but in general, if you want to build wealth, it's a long-term game. You just buy something, take care of it, make it nice, increase the value, and then over time, it should continue to appreciate. Risk management, market volatility, so you want to be aware of that. Cash flow is vital. This is where if you're getting cash flow on a property, if the market goes up, if the market goes down, it doesn't matter. As long as the mortgage is getting paid and you're making a little bit of spread on top, you'll be able to weather the storm, unless you're going through some type of vacancy, but that happens as well. And that you're going to be prepared for that when you're doing your risk management. Stay informed about market trends. That's why these real estate professionals and agents and people, you have boots on the ground in a certain market. That's where they bring the most value, because they can tell you what's changing, what they're seeing. Market rent is going up, going down, and you can adjust. And just having professional relationships is key to doing like any type of long distance investing, and they can be invaluable to your whole operation. And then be prepared for unexpected expenses. It's going to happen, but that's why you have cash flow, because that cash flow goes into a bucket. And you have to replace a roof. You take that money in the bucket and you pay for the roof, so you're not out of pocket, right? So these are the type of things that you have to be prepared for. And yeah, so final thoughts. Real estate investing is not perfect. Don't be afraid of failing, or else you'll never get started. Keep a positive outlook. Be adaptable to change. Real estate investing is a long-term game, and join real estate communities or any type of community or mentorship program that will help you accelerate your goals. Pause. Any questions? Question.
Jay, I have a question.
Sure.
Yeah. I'm curious, at what point did you decided to find like a professional CPA that managed your entire portfolio from your W-2? Because I'm kind of in this turning point where we like, I've been doing my taxes on my own, and I just wasn't sure, like how much did you first spend, and then lesson learned on the way on tax preparation.
So I got a CPA involved 2 years ago, and 2 years ago wasn't a good fit. So I had to find another one last year, which is a great fit. So you have to go through that process. But for me, it wasn't as important to have like a real estate professional or I guess a CPA that was versed in the real estate space, because I didn't really have a big portfolio at the time. But as I grew my portfolio, what triggered me to really seek help from a CPA was bookkeeping. I didn't really know how to manage. I couldn't really tell my profit and losses. I couldn't tell how much this was generating. I didn't really have tactics or methods of bookkeeping. So that's when I started to think like, okay, I want to get business loans. And when I'm getting business loans, they need to see what your profit and losses look like, what your cash balance looks like on a quarterly, on a monthly. And I just didn't have systems in place to do that. So that's when I started to seek further advice. Yeah, so I don't know if that answered your question.
That's great. That's great. So about at your third property, you started working with a CPA, would you say so?
Yeah, somewhere around there. Fourth, probably fourth. Then I started working because I really needed to get my books in order, like my accounting. I really don't like that, but he gave me some systems and strategies to manage that, because I don't know how much I wanted to know how much I made at any given moment, right? So that was kind of the drive behind it. And then I was trying to get business loans, but they needed to see my quarterly statements, and I didn't have systems in place. So then that's when I started to go down that road. I guess it depends on what it is you're trying to accomplish. Do you have a portfolio? Do you need, your accounting? Do you need your profit? It would depend on a lot of things. So, I mean, maybe we can connect and, we can talk and see where you're at and what your goals are, and maybe I could connect you. So
Thank you. Appreciate that.
you're welcome. Let's go, M. Ternulo.
Hey Jay, it's Monica.
Monica, hi.
Yeah.
Thanks for joining.
Sorry to shift gears a little bit. I probably should have asked this earlier, but something stood out to me when you were talking kind of about your journey, in that you had a lot of people that doubted you, even within your family. So my question was just like, how did you get over that? How did you get past that? How did that impact you?
Yeah, no, it's a great question. When you have a purpose and a goal that you feel so strongly towards, and for me, that's my kids, getting them out of that neighborhood. I felt like if one of those bullets would have flew through the window and hit one of us, or hit my kids, or somebody in the house visiting, I don't even know how I'd be able to move on with life. That's how intense I felt and how strongly I felt. So there's other things that happen too, like my mom's passing. I won't get too much into that, but when you have something that you're so focused on achieving, the obstacles and all the doubt is irrelevant. It doesn't matter. Like the challenges don't matter, right? Like I have this conversation often, but I'll use this analogy, right? If you have a beam across a lake, and there's a bunch of hungry alligators underneath that lake, and you have to walk across. Would you walk across for $20? Probably not. But if your mom or your kid was over there, you would do it for free. And that's what I mean. It's like the purpose of why you're doing it is so strong. The challenges and obstacles are irrelevant. That's just part of the process. You're still going to get to where you're going to go. You're still going to walk across that beam and get your kids. So that's how I look at it, right? Like I'm so focused on doing something, I have to like block out that noise. And if I would have believed them, I wouldn't be where I'm at right now. This is my family calling me crazy. You buying a house at the height of COVID? We're in a recession. Don't be stupid, right? This is my family telling me, or you'll never buy a house in the Bay Area. You never, and they're just projecting their fears on me. That's how they feel. That doesn't mean that's how I feel, right? So that's just how that's how I look at life right now, right? Sometimes I feel upset or hurt when somebody's like somebody I love or care about tells me these things, but I know I have a purpose, and I'm doing what I'm doing, and I have to stay focused. I have to stay disciplined, and I just have to keep moving. Otherwise, as I said, if you're not changing, or you're not doing anything to change your trajectory or your life, nothing's going to change. You're going to be where you're at, same place next year, and that's a waste of time for me. So I don't know if that helps, but that's how I look at it. Like, my purpose and my reason is so strong, nothing else matters.
Well said, Jay. I really appreciate your honesty.
Thank you. Question for Angel. Angel's phone? No?
Hey Jay, quick question for you. Earlier you had mentioned about how C properties tend to, give you more headache. When does it make sense for you to get a C class property, and do you have any in your portfolio right now?
Yeah, so I think it boils down to your risk tolerance. For me, my experience, I do have a C-class property, and it's been one of my biggest headaches in my portfolio, to be completely honest. It's the tenant pool, the area, they really don't take care of the properties. They'll have late payments. So that's where it comes down to the location. If you go into a C-class location, you're going to get C-class tenants, and they don't really care about your property. They'll trash your property. I take that back. Not everybody's like that, but my experience. So because of that, like, I've had a vacancy for like almost 7 months, right? So I'm flipping the bill on the mortgage for 7 months because the quality of, there was a lot of applicants, but they didn't qualify because the credit score is too low. They didn't have, they're trying to get a lower monthly payment, and you just have to deal with that. And so it's not my favorite to do a C-class area, especially now where I'm at right now. I think, yeah, it could be worth it. You'll get, like Terrell says in the chat, right? There's a potential for higher return, but you also have to worry about the turnover, the cost of that, the type of tenants. Are they going to take care of your property? Whereas you go to like a B or A class property, they're probably, cool people, good credit. They're just trying to take care of their stuff. And that's the type of tenant that I would prefer. But, I've had good experience and bad experience with C-class. So my preference is like a B class, at least.
Thank you.
You're welcome. And then I know we're kind of running close on time, so let's see here. Yeah, so this is, if you want to connect with me, I'd love to connect with everybody on here. I'm most active on Instagram. There's my QR code. Give me a follow. Let me know you're on the call. I'd love to connect. And Zen Coast has been a catapult for me. We just went to a retreat in Hawaii. Just came back Monday from Hawaii, and that bottom left picture was all of us in Hawaii. So it's a good community that's been helpful for me. If you want to learn more about Zen Coast, I got the QR code for the group as well. And yeah, coaching, mentorship, community focuses on creating passive income using real estate. And then, yeah, so if you have any interest, just scan that code. We'll also send out a recording of this video and the slides. So hopefully, we can connect in the future. I would love to see everybody excel, reach their goals, 2024 and beyond. Like, if I can do this, I'm pretty sure a lot of you on here can do this as well. And I'm doing this full-time job, kids, still real estate investing. And yeah, so hopefully you guys got a lot out of this. Very thankful that you guys were able to join, take time out of your busy day. And again, let's, be happy to connect with all of you on Instagram in the future. Hopefully we can connect at an event or something. And yeah. Any other questions? No? All right, I'm gonna leave it on this note, right? We're coming up 2 minutes. Mindset, growth, and transformation. That's what the communities that I'm part of, that's what it is, right? Creating passive income, creating impact. And all of you have the capability of doing this. I 100% truly believe that if I can do something like this, all you guys can do it. thank you guys so much for joining. Like I said, please connect with me, or I hope you guys can. Let me just get the QR codes again in case you missed it, but would love to connect. And hopefully I get to talk to you guys soon.